welcome to the bottom line. This is a special monetary policy episode. Uh, every 2 months, the Reserve Bank of India reassesses the monetary policy of the economy and plays out certain decisions about the interest rates and any other policy changes that they have to make. So that's why the title here is what I expect to happen on 10th of August, which is the day when the monetary policy meetings will end and a decision will be given, made public. And then you will obviously see reactions, short term and medium terms, from the markets as well. So broadly, the key pointers that we'll cover is where are the current interest rates right now? At what juncture are we? What are the current inflation conditions? The Indian household expectation of inflation, which is a very important metric that helps in forecasting and understanding how the people of the country are thinking about inflation at a certain point of time. The inflation forecast overall, where is the inflation expected to be after a certain point of time, and then concluding statement on the policy action that I feel the likely result of the policy action on the 10th of August. So to start with, the current interest rates are at 6.5%, and with the guidance as withdrawal of accommodation. That means they will not be supporting growth as much as they would like to. They'll be supporting controlling inflation as their top priority. That is what I interpret as withdrawal of accommodation. If we go down to the current inflation, then the current inflation numbers have seen a recent downturn from existing the old levels of 7.5. It had peaked, but now we've come down to a 4.81, which is a good thing. But the inflation is still not in the range that we need, which is 4 to 6, in the range of 4 to 6%, and it should sustain there. That's the most important part. The problem with sustenance at this point is that there is a good amount of chances that food inflation is going to be a big problem in the coming month. It will all depend on how the rainfall is, how our harvesting season goes. All of that is going to add up a lot. But you're seeing right now the supply side problem in the prices of tomatoes, and that is part of the index. And food, takes care of a really big chunk of our CPI inflation, apart from all the other necessary goods that are there. So that's where inflation is. Food inflation has risen sharply, as you can see. This is why I feel that if food inflation continues to grow, and that will take the overall CPI inflation much higher than anticipated. So that's one of the fear factors or the pain points that the Reserve Bank will be closely looking at. If we look at the household expectations now, let me give you an understanding of household expectations. Is Reserve Bank conducts a survey, bi-monthly, to understand how many households are thinking of inflation and expecting inflation to grow from here. What are their understanding? How many of them are really trying to or are indicating that they don't foresee any new inflation, because the expectations play a very major role in RBI's policy action. And all these numbers that you see right now are 1 year ahead inflation expectations, which means if I look at the numbers here, then this is around June numbers, and the June numbers suggest that the expectation of the households 1 year ahead from here is 10.4. Now, you cannot look at it in an isolated manner. You have to understand that the expected inflation has actually fallen from 12.7 to 10.4%. So you cannot take an absolute number and say that the households are expecting 10.4 and that means the inflation will go to 10.4. No, generally the households always tend to over exaggerate in terms of the numbers, because their basket of products is very small. They are looking at only a very few household things, but CPI consists of a much larger basket, and eventually the number is quite smaller than the expectation. So the expectations are slowly coming down. So people are now expecting that the inflation will start reducing as we move ahead, right? Which is a good sign for Reserve Bank to also understand how their policy stance should be. The overall inflation forecast, this is again by MOSPI, and the overall inflation forecast all the way up to the next year's first half is well above the 4%, which can get hit by one or two food inflation spikes, and it can really trouble the inflation index in a negative manner, and that is going to be a key part to watch for in the upcoming months of food inflation and CPI numbers to come out. The forecast right now is showing it will be close to 4%. I slightly feel that is aggressive. We will see a significant uptick in inflation, which will have to be tamed again, or which will automatically get tamed because of the policy actions that we have taken in the past, right? But that's what is my view so far. So, in terms of conclusions, the Indian inflation expectation need to reduce further. People need to think or expect or at least feel that the inflation is starting to reduce in the economy. That is going to be the first signs for Reserve Bank to take any growth spur related actions. The inflation actuals are showing a forecast that will nearly stay between 4 to 6%. As I said, it is at risk. How much we don't know, but only the numbers will tell in the coming months. So, food inflation, ongoing concern. I am expecting that on the 10th of August, the interest rates will stay unchanged at 6.5. If, and this is again a subjective perspective, that if all the members of the MPC, the Monetary Policy Committee of Reserve Bank, see that the inflation coming ahead is going to trouble us, then they would even go for a minor 25 basis point hike in the coming policy statement, just because of the fact that this policy decision that they will take today will benefit us in the next year of March, because there is always a lag when policy decision is taken and the actual impact of policy comes into play. So that's where I feel that this is a very subjective matter, but I am in the view of either we keep the interest rates as is or increase by 25 basis point if you want to be really prudent. I would not, I would put more of weightage to keep the interest rates as is, because anyway we are not really growing too fast. The inflations are significantly around 4 to 6%. So it would be fine if we keep the interest rates as is. Right. Now, this would put you into a question of how do I understand inflation and interest rates. So I would recommend you to go to the YouTube channel and watch the two videos that I've listed here. One is inflation to interest rate correlation, and the second one is if interest rates continue to be high from here for the next 6 to 9 months, how should the investing during that period be done? I hope this was insightful. Keep a watch on what happens on 10th of August. See if this analysis has helped you in understanding the monetary policy better. And I'll see you in the next one. Bye bye.